We've all heard it.
Compared to being freaking in debt to your eyeballs and paying all your income to a stupid bank and interest coming out your ears, all in the name of having a credit score. Stupid, America. It's stupid.
So is he right? Well, kind of. But there's a lot not being said in that rant. What do I mean by that? Let's get into the numbers. Credit reporting as we know it actually started in the mid-1800s with the Mercantile Agency. At this point in history, consumer lending wasn't really a thing, so this company created files for business-to-business lending. But this all changed in the 1900s as consumers started seeking credit in order to be able to afford a more middle-class lifestyle. And at one point, there were over 2,000 credit reporting agencies across America whose purpose was to tell banks and lending institutions if a person was worthy of credit. And those 2,000 credit reporting agencies were eventually all bought up until we only had 3 credit reporting agencies left standing. And those, of course, are the ones we know today, which are Equifax, Experian, and TransUnion. Almost forgot what they were. Now, these 3 companies were having difficulty interpreting data collected across all of their separate credit files, so they turned to Fair Isaac and Company, or FICO, F-I-C-O, to come up with an industry standard credit score that combined all the information available from all 3 companies. And the credit score became a general way so that lenders could know whether or not a consumer could actually afford a loan or could be given a credit card, and for how much. And for a while, this is really all the FICO score was used for, and it only became more popular in the 90s when Fannie Mae and Freddie Mac, 2 large mortgage giants, started requiring it for any mortgage product they would buy. And then we started to see a shift from what types of entities were actually using the credit score for different types of purposes. Phone companies, for example, would or would not give you service based on your credit score. Insurance companies could raise your rates or lower your rates based on the type of credit score that you have. Companies could choose not to hire you because your credit score was too low or because of something negative that they found in your credit report. So in actuality, the FICO score is more than just an I love debt score. It can also determine what rates we are paying for home insurance, car insurance, or literally any kind of insurance in a state that allows it, where an insurance company uses a score to determine the rates that we will pay. And I don't know about you, but I would much rather have a higher score so that I don't have to pay as much in insurance payments. There's also the fact that in a majority of states, a company can legally reject you for a job because of what is or isn't on your credit report, as they may see a mishandling of personal credit as a sign that a person might be less dependable in a specific job they are seeking. Now, there is the Fair Credit Reporting Act, which does protect potential employees or someone who's about to be hired in a way. But again, this was one way that the credit score and credit reporting agencies were being used that wasn't mentioned. Lastly, there's the hassle of not having a credit file or a credit score of 0, of which Dave so strongly boasts.
My credit score, very proudly, is indeterminable, which is the FICO score people way of saying I have a 0 score.
So in my own experience, I was 23 years old. I was ready to rent my very first apartment. I was a massive Dave Ramsey fan at that time, which was great because I came out of college, worked my way through college, had no student loans, no credit card debt, nothing of that. But when I went to apply to stay at my first apartment, I was forced to pay double the security deposit amount because I had 0 credit history and no credit score. And in reality, if there's a dependable way for potential landlords to know whether or not someone will pay the rent with a credit score, and I show up and have no score at all, then it makes sense that the landlord would want to protect themselves and get a much larger security deposit up front. So there's also the problem with getting a mortgage. So after I rented for about a year, I was ready to buy a home. I had 20% that I had saved to put down in that home, but I could not find any mortgage companies that were willing to write a mortgage on me. Eventually, I was able to find a company that did manual underwriting, which is something that Dave Ramsey highly recommends, but the interest rate that they offered me was 0.5% higher than any of the other companies that I had talked to. So is a credit score important? Can it be just something that we ignore? Absolutely not. It is very important to have a high credit score. But once it's been established and we're making good financial decisions, is it something that we should just be completely worried about? Absolutely not. Here's why. Because people who are successful financially will A, avoid debt as much as possible. They will loathe credit card balances and high monthly payments. And as these solid financial decisions are made, our credit score will naturally rise because of those solid decisions. So when a solid credit score is actually needed, whether that be to get a job, whether that to be lower interest rates because we have a higher credit score, whether that to be get better interest rates on a mortgage that we're trying to get whenever we're buying a house, it will be there because we've been making these solid financial decisions. If you'd like to know more about how you can improve your credit score, then make sure you stay tuned. I know that I just said that it's not important once we get it established as long as we're making the right financial decisions, but if we are trying to raise our score, there are certain things that we can do to help that happen a little bit quicker. Also, if you like the video, make sure you give us a like, share with anybody who's curious about credit scores, whether or not they're actually important or not. And if you're curious about the journey that I have had up to this point with Dave Ramsey, then check out this video. It's one that had a lot of influence and it shows exactly my path from then until now.